All right, welcome back, mates. Crypto Leverage Trading Group. Everybody's doing well this Friday morning. We're kind of doing some setups for the weekend like we normally do, but I want to do a quick here video on Bitcoin. We're on TradingView using the Bitstamp exchange. We're looking at Bitcoin on the 4-hour, mates. So I have no real indicators here marked on the chart, really, because I just want to talk about this from a macro perspective a little bit, from a commentary perspective. We do have a 7-day moving average and a 21-day moving average, which we use for our 721 method on the board. And you can kind of see that Bitcoin is falling back below both of those. And the question ultimately would be why? After 3 days of moving higher, okay, more or less, from a low of support off of 38 all the way back up to 42,800. Why are we coming down now? And the biggest reality is we're coming down because of Fed FUD. We're coming down because of global economics. Even though we're seeing the war in Ukraine kind of come down out of the news in terms of the top, things being focused on, that's still an underlying issue that, in terms of sanctions and all that stuff that's impacting the global financial institutions. And this is really the point. And I warned about this to what you would ultimately know as the cyberpunk community almost a decade ago, 7-8 years ago. This is when you let the barbarians, this is what happens when the barbarians were allowed in the gate. Okay. And the barbarians, in truth, in terms of monetary policy, whether you want to look at it in terms of financial instruments, commodities, trading, well, the barbarians are the institutions. Okay. And there were a lot of people back then who were like, didn't want institutions, right? If you look at content providers on YouTube, you will find that primarily most of them were always very supportive of institutional entry into crypto. And you hear me talk about it all the time on a lot of my videos, adoption and acceptance. That will create, interest, right? Validity, social proof, whatever, to the market, right? For the world, now JP Morgan has gotten into Bitcoin. Fidelity has gotten into Bitcoin. Right? And then, Grayscale came along, right? And now we're having electric traded funds. All this stuff creates an issue that people don't talk about enough. And that's it. These institutions are guided by different parameter principles and mentality than those of us who innately supported crypto for the reasons we supported crypto, okay? As a counter currency to fiat. Institutions are all tied to fiat. They're all tied to that mentality of economics and the numbers. And if you look at any of the economy and the inflation, they fudge everything. If you look at what's the inflation rate using the 1990 way they did it, 17%. What's the inflation rate right now using the or 80s and then the 2000 manner, about 12%. What's the inflation rate in the United States right now? They tell us 8%. Based on what? Again, they're doing what they do, which is called manipulation. Okay, the whole point of crypto was not to be able to have an administrator, not to be able to have someone be able to manipulate it, right? Well, what institutions have done, and they've just backdoored us. They've backdoored manipulation because they control enough of the supply, they can manipulate the price, okay? And so you constantly have to be looking at how much they're holding and when they are selling because of the impact. And so when everyone's like, oh, well, again, these things are happening right when, for Bitcoin, now in the 40,000 range again, and it will probably test 38,000 again, could break it. I mean, it's tested it a few times. We know that. Here, it bounced back quickly, but we'll see. But a lot of that will be predicated on the institutional's appetite for it. They could want to drive it back down to 30 to buy back again, okay, as opposed to everybody else like us, right? And so that's